We finally have a little bit of good news from foreign investors and how they're thinking about investing or not investing in Chinese markets. Let's check that out. Article here talking about how China has silenced a prominent market analyst for basically talking about the outflows from the Chinese stock market, right? So outflow of foreign investment, right? So foreign dollars either going in, inflow, or going out, outflow. What do you want to see? You want to see inflow, not outflow, right? You want more foreign money coming into your stock market rather than less. Fifth largest state-owned bank in China, right? This is the managing director and head of research. Just had his WeChat account, his social media frozen because he started to talk about the slowdown in the Chinese economy and some of these investment outflows, right? If you look at Chinese state media, this is the globaltimes.cn, Chinese stock market bucks trend of capital outflows from emerging economies. It's just from last week, right? So if you look at their thing, they say, hey, China's stock market saw considerable capital inflows in April. Even as stock markets in other emerging economies saw major outflows due to the US interest rate. When the Fed raises interest rates, people get more risk averse. They want to take their money out of riskier markets and kind of bring that back, flight to safety kind of stuff, right? This is the Chinese article. In April, emerging markets saw an outflow of $9.5 billion from their stock markets and an inflow of $5.5 billion from their bond markets, right? So going from stocks to bonds, bonds are safer, stocks are riskier. But the Chinese stock market bucked the trend and attracted $1 billion in capital inflows. So they're saying, you have a net outflow in emerging markets of $4 billion, right? 9.5 billion left stocks, 5.5 billion into bonds. And this is where they get really tricky with this. So this guy was really talking, the managing director who was taken off of social media, I think he was really talking about stock market outflows. That article from the Chinese state media very slyly, easily just lumps together kind of, we had capital inflows of $1 billion. If you look at this Reuters article, which is then talking about the Chinese stocks having net outflows, right? So if you look here, the Chinese stock market had net outflows in March of, say, around $7 billion. And then they had, $1 billion or so in April. So what the Chinese state media article is essentially, I'm assuming they're doing, is saying, well, we had $1 billion outflow from the stock market in April, and I guess you had $2 billion inflow into the bonds in April, if they're going to get to $1 billion, if that stat is even true. So you've got kind of the state media working to, again, control opinion. Hey, China's good. We got money coming in. Conveniently obfuscating between stock and bond inflow, outflow. And then you've got them silencing the managing director at one of these big investment banks who wants to talk about, hey, our economy is slowing down. Hey, our stock market is having a lot of outflows. You can't talk about that. And now what's interesting is this article was kind of published at the end of April. They didn't have the bond data for April yet, but you can see here also massive outflows from the bond market, actually even before March, but in February as well, where you had probably about 11 or 12 billion outflow in February, and then you had probably about 17 billion outflow in March. Actually difficult to find the April numbers. Coincidence? I think not. But you got Financial Times article here just from yesterday, so mid-May here, actually saying the April outflow was just as great as March, around 16 billion. Foreign investors sold more than $16 billion worth of Chinese debt in April, taking net outflows from the country's bond market to a record 235 billion RMB, which I guess is, close to $40 billion. Yeah, roughly. Now I look at that, if you have the April data, then this Chinese article, I don't know what they're completely fudging the numbers. Because if the Financial Times is saying the April bond outflows were just as great basically as March, a few days before the Financial Times article is published, Chinese state media is saying, no, we had a net inflow of $1 billion across both stocks and bonds, also kind of fudging the delineation between stock outflow and bond inflow, outflow. Now I read the Chinese article and It's just lies. It's just fake news. Clearly, thankfully, finally, some investors are weary of putting money into Chinese markets. Probably a good idea. Been saying it for years. If you think the U.S. economy is built up on hot air and a house of cards by printing almost $10 trillion, we pale in comparison to what the Chinese economy has done. If we printed $10 trillion, they've easily printed over $30 trillion. They were printing money long before COVID. So were we, but never to that degree. They make us look like complete amateurs in the money printing department. And that's what's so scary for them conquering Hong Kong. They took it, they stole it, they captured it, hostile takeover. And then using Hong Kong as a mechanism to bring what has been historically a very closed and insular economy, right? The global economy has been somewhat insulated from a financial standpoint to the money printing that China does, right? Supply chain standpoint, globally, we're very connected to China. But from a financial standpoint, they've been somewhat disconnected. Now, in just literally the past, 8-9 months between them conquering Hong Kong and us creating a vacuum in Russia, taking out all of our banking relationships, technology relationships with Russia, who has filled that vacuum? Oh, China. So now you've seen a massive expansion of the Chinese financial tentacles. And if you think the US government creates risk for the global financial system by how much money we are printing, China puts us to shame. And that is very scary. So thank God we're seeing some pullback from investors putting money into their markets, but I also don't think it's enough to stem the advancement of them just more tightly integrating the RMB and their different payment systems and banking systems and kind of reciprocal trade relationships, right? Buying materials from China in RMB as opposed to, for example, dollars or other, or euros. It's not good news, right? As the RMB kind of proliferates its use in other economies, not the Chinese economy, then that means that their ability to print money and further stand up their economy on hot air, everyone else that is building more of a reliance on the RMB is essentially taking on that risk. Very scary stuff. Go check out our other videos documenting the role of the Chinese government versus Chinese big tech monopolies.